Hi, so what we're going to do is we're going to take a look at Chapter 7, Problem 1, and we're going to go through 1 and 2 that's required for this. So the Midori Company merchandises a single product. The following data representing the inventory of the purchases of gloss during the past year. So in January 1, they had inventory. And they had 68,000 units at $11. So here's what I'm going to do. I'm going to do units, cost, and this is how you set up. So this is actually the answer to 1. And the total cost for that is the 68 times the 11. So that's 748,000. So here's what we're going to do for those of you. We're going to format the cells, and we're going to make them accounting. So we're not going to use decimal points and such at this time. For the cost, we will, however, just in case we need it. So for accounting, we're going to use decimal points, but we're going to lose $1. So then on February 1, we purchase. So I'm just going to put February because it appears we use months. We purchase 80,000 units at $12. Then we're basically going to drag our total here. And then March, we also purchase 160,000 units at $12.40. April, we purchase oh no, April, do we purchase anything? Nope, sorry. Reverse that. May, we purchase 120,000 units at $12.60. July, we purchased 200,000 units. Oh, purchase 200,000 units for $12.80. In September, we purchase 160,000 units at $12.60. And then November, we purchased 60,000 units at $13 a piece, which is $780. Our total purchases for units, we have a total units of 848,000 units available for sale. And then our total price we've paid for these units is $10,560,000. So this is number 1. So now let's take a look at number 2. So for part 2, we're going to take a look at the average costing method of inventory. So here's what we need to do is we take a look, and there's some additional information for us. It tells us the sale units are 780,000, and they were sold at $20 a piece. So this times this would give us 786,000. Am I correct in Yeah, 786,000. So that will give us 15,720,000 that were sold. So of that, you would have, so the first step you would need to figure out is what is your ending inventory to calculate your net income, or your income before taxes. So looking at ending inventory, I'm going to use the items above. So my ending inventory is, I had 848,000, I sold 786, so I have a total of 62,000 units. Now, to figure out the average price, I would actually do the total price divided by the number of units, which gives me $12.45. So to figure that out, my total ending inventory value is the 62,000 times $12.45. Actually, let me see if I can get a nice round number here. There we go. Gives me $772,075 as my ending inventory. So with that being said, I can take my sales of 15,720,000. I can then subtract my cost of goods sold, which will equal the 786,000 units times my cost, since I'm using average cost, and my cost of goods sold would be 9,787,925. And again, it all depends on how you round these items. So if you're very close, then it's really just due to rounding. So with that being said, my cost of goods sold, my gross margin is the difference between these two items. So the 15 million less the 9.7 will give me 5,932,000, less my admin items, which they told me. So my admin costs are 5,102,000. So then my net income is the 5.9 less the admin costs. My net income is $830,075. That is the answer to the first one. So remember, in order to come up with net income and such, and again, this is on the average costing method, I first need to figure out what my value of ending inventory is so that I can back into the cost of goods sold. So now let's take a look at the as using the FIFO method. So looking at the FIFO method, remember, first in, first out. So I would need to figure out which items were sold and such for that. So taking a look at the FIFO method, remember, my ending inventory value, inventory in units, is 62,000 units. So FIFO, first in, first out, means I sell from the top down. So let's copy these items down here. I'm just going to put it to the side so we can look at it at the same time. So I need 62,000 units. So my November purchase alone, and this is my ending inventory value. So my November purchases alone would still be left, and whatever is left out of that. So actually my November is 60,000 at $13. So units, price, total. So of that, I then only need, since I have 62,000, I then only need 2,000 more units. So I would go into my September units, and I would have 2,000 of those at $12.60. And that total would be $25,200. Now, how did I get this? You're probably asking. We can do it one of two ways. You can look at it that way and work from the bottom and say, I have 62,000. I must have all of my November and part of my September. Or you can do it based on the cost of goods sold element. So here's what I'm going to do is I'm going to figure out the cost of goods sold for you the different way to see, for those of you who learn the other way. So February, and basically what you look at is cost of goods sold. You sold 786,000 units. And then here, what we're going to do is we're going to break out what units you sold. So we're going to do January 1, your items. Format my spreadsheet a little. So you sold all of your January items. And let's see what the remaining ones you sold. Now I'm just going to do this for copying purposes. So I know when I get down to the bottom, I need 786,000 units, correct? That's how many I sold. So what I can do is say, okay, I have the 786 less the sum of what I think I sold and try it out that way. So basically I say, okay, first in, first out, I sold my beginning inventory, and then you keep going down the line. So then you get to September, and you must have sold 158,000. Now, I say this only because you have enough to sell in September of that. So in your September, you sold 158,000 of that. Therefore, your total units sold gets you to 786,000. And your cost of goods sold value is $974,800. So if I take a look at above, and again, I already did the calculation, so what we're going to do here is we're just going to copy above, and then we're going to format it to how we want it. So in FIFO, and I'm just going to put FIFO above it again, FIFO, you have sales of 15,720,000. Your cost of goods sold we solved for above. You have a gross margin of 5.96. You have your admin, so your net income before taxes and such is 863,200 in the FIFO method. Any questions on that? If you guys are getting lost at a certain point, please let me know where that is. So again, in this FIFO example, I went either from the bottom up for the number of units I had remaining, or I went from the top down for the number of units I had sold. You can do either method. It's really just a matter of what clicks for you. So now we're going to take a look at the last item, which is LIFO. And again, I'm going to do it the same. I have ending inventory of 62,000 units. And I sold 786,000 units. Now remember, this is on the periodic inventory system. It's very important to differentiate which system you're doing. So I'm going to copy this information from above and bring it down to the LIFO as we're doing it. So taking a look at this LIFO, last in, first out. So I would have sold from the bottom up at this point. So if I'm doing it taking a look at the last items, I would have January inventory. I would have, I'm going to copy my top here. I would have January inventory, and I would have 62,000 units at $12 a piece times this. So how do I know I have 62,000? Well, remember, I work from the bottom down, so I would sell all of these items. And then because, I'm sorry, I would sell all of these items. And then because January has more than 62 in it, I would know that I would only have the 62 remaining. So again, had I done it that way, I would know my cost of goods sold would be the total available for sale less the total I have in ending inventory. On that. So if you choose to do it the other method, you would simply detail out sold items. So since I have it here, I'm just going to copy it. And I'm actually going to copy from the bottom to show you how it would first then be sold. So you would sell November 1st, then you'd move on to September, then you'd sell July, then you'd sell May, then you'd sell March, then you would sell February, and then you would sell part of January. Now, how do I know it's part of January? Taking a look at it, I would say, once again, I need to look at my total number of units. So I only have 780,000 units. I need another 6,000. So then I would know that I would have to sell 6,000 of my January items, which would give me that. Now again, let's check our total cost of goods sold. Should in fact equal itself out. So why does it not? So I have all of these items sold. I have 786,000 units sold. So what is wrong? Oh, I can tell what's wrong. So I just put in the wrong inventory value up here. So there we go. So the 62 units are at the $11, which is the January 1st inventory. So my cost of goods sold by these two methods, which now ties, I would have $9,878,000 of my cost of sales, cost of goods sold. So then doing out my income statement, you would take a look, and I would have FIFO sales of 15 million. I'm sorry, this is a LIFO calculation. I would have sales of 15,720,000. My cost of goods sold would be the 9,878,000, and then my net income before taxes would be 740,000. Any questions on that? So taking a look at these, this is the periodic inventory system. So why is it periodic? Why is it not perpetual? Here's how you know that it's periodic. It is periodic because you're not going in and saying, okay, I sold 20,000 items in February, adjust the cost. I sold 20,000 items in March, adjust the cost. You're only doing it essentially at the end of your year. That is periodic. Perpetual means I bought 4 units, I sold 2, calculate the cost. I bought this, I sold this. Every time you change or make, whether it's purchase or sale, you adjust the cost for that. So that being said, you then need to take a look at what's transpired from that and readjust your cost. This is taking a look at the perpetual and adjusting it. So please email me with any questions and such on Chapter 7. The next video I will do will go over some Chapter 8 items and some questions and such on that. Hi class. So we're going to take a look at Chapter 8, Problem 1. And we're going to look at the bank reconciliation for Delta Company. Now, some of you are thinking, why would I reconcile my bank? Well, it's just like doing a checkbook. you write checks, and although they're not cashed, you essentially can't use the money otherwise. So we're going to take a look, and the first line you start with on a bank reconciliation is the bank balance per bank. So this happens to be for April 30th, 2014. So the balance you have there is $141,717.08. So let me fix all my formats. And the reason you start with the balance per bank is you agree that that's what's in the bank. So essentially, although the bank has that, there's some other things they're not accounting for that happened by April 30th, so you need to account for that. Then you do deposits in transit, and you actually add the deposits in transit. And you add them because it hasn't cleared the bank, but you've deposited it as of that date. And that is $14,249.84. And then what else do you add? You actually add the check mistake of Alpha Corp. Back. So you add the $800 back. $800. So then you come up with, oh, actually, you know what, let me move this. Let me move this to get our subtotals. And we'll actually come up with $15,049. And then a subtotal so far of that. So the next thing to do is actually deduct the outstanding checks. Now the reason you have outstanding checks is you've cut the checks, you've signed them, and then the bank, they haven't cleared the bank yet. So that is $7,293.64. So your adjusted bank balance for April 30th, 2014 is the $156 less the $7,293. So your balance per books is the next step. And you take a look at your balance per books, which is 175.28. You then have to add the following items. Note receivable collected by bank. So the reason it's not in your books is the bank has collected it at this point. So that is $36,000. You then add the interest also, because you earned it and received it, interest on note collected by bank. Need to work on my spelling. And that is $400. You then also need to, you've earned interest on your average balance of your checking account, and that is $460. The sum total of that is $36,860. If you add those items together, you come to $151,000. Now you're not done, because you also need to subtract some items, and those items are the check recorded incorrectly in your check register, and that check is for $396. You then also need to record the bank service charges. So the bank service charges aren't things you know of in advance necessarily. They could be the same monthly, but really you wait until you receive your bank statement and then account for these items. And then you also have a not sufficient check for funds. So you would include that here. And that's $1,140.60. So your total to subtract at that point is $1,052 and actually that's not 0.6. That's just 1,140. So my total adjusted book balance per books, April 30th, 2014, also ties to my adjusted bank balance of $149,473.28. Please take a look at this review as we do have an exam coming up on Chapter 7 and Chapter 8. If you could please look at... So then we need to take a look at the second part of this. I will discuss very soon the exam. But let's take a look at the entries. The first entry you need to make would be to record the note receivable that you received. So the entry is cash, a total of $36,000 for the note plus the interest of $400 received. That's the total cash. Then you would credit note receivable and interest income. So you credit the note receivable for the $36,000 and the $400 for the cash. Then you would also, in entry 2, you would need to record, hold on, let me number these for you. Entry 1, you would need to record that. Entry 2, you would record the cash and interest income. And that's from the average balance that you've received, so that's $460. So this is note received by bank. This is interest on average balance. Then the next entry you would adjust for is the check incorrectly. So you need to redo that. So basically take it out. So it would be $396 to advertising expense and then cash of $396. And this is to correct check incorrect and register. So entry 4 would then be to do the bank service charge payment, and that would be $26, and it came out of cash, so you would credit cash. So the final entry for this is for the non-sufficient funds check, and that would be accounts receivable for $1,140, and then also cash because you did not receive it. So with all of those adjustments, the end amount is that your balance per books is $149,473.28. So taking a look at the course schedule, next up you do have the Chapter 8 homework, and you also have the review solutions, which this is part of. And with regards to that, your exam is also due for the 30th. So your exam is in Excel. What'll happen is you download the Excel and you save it to your desktop or somewhere on your computer. You then complete the exam and then upload it like a file, like a homework file. So I wanted to just discuss what's included in your exam. You have, so an inventory calculation, you have some adjustments, and I tell you what was sold during the year, and then you calculate the inventory, balance and the cost of goods sold balance. You also have some inventory ratios to calculate. Then you have some multiple choice, and then finally you have a bank reconciliation, which is why I've gone over this example for review. So please, feel free to contact me about your homework and such. Your exam, I will not answer questions on unless there's something that you feel is inaccurate in the exam. But please remember the exam is due on the 30th. I will actually extend the time to do on the 30th at 11:55 p.m. Once you have completed your exam and your assignments this week, please go on to Chapter 9. I will be uploading the Chapter 9 PowerPoint shortly. So please let me know if you have any questions. Again, watch these videos. Look into some different things. The key in this chapter, in Chapter 8, is the balance you're given by the bank isn't always right. So just like any time, even when we, use our debit card, sometimes it takes a little while to purchase, like say you buy gas. It'll come up pre-authorized as $1, but until, the whole thing reconciles and comes out, it'll just be the dollar, but yet you pumped $20 of gas and such. So please remember, ask questions. I am here. You can feel free to text me, call me. If it's during normal work hours, I most likely will not answer. But you could also, shoot me an email with a picture of your spreadsheet or show me your spreadsheet and let me know if you're struggling. I'm trying in homework to give feedback and different things. Let me know what else you guys need. We are almost halfway through the class and such. So